Welcome back, Adam here from Coconut, and today I'm going to be covering everything you need to know about making tax digital, or MTD for income tax. To do this, I'm going to show you what MTD for income tax is and what it actually means for you, what you'll need to do in the year that you make the move to MTD, and how using Coconut can help to simplify the process. Now, if you're self-employed, then you'll be very familiar with the current way that HMRC ask you to report your income and pay tax. It's known as the annual self-assessment tax return, a process that was introduced in the late 90s in paper form and then was taken online in 2000, seeing 36,000 tax returns submitted online in the first year following rollout. That process has come a long way, with well in excess of 10 million returns being submitted online nowadays. However, despite its apparent success, the process that we know so well is being replaced, at least for some. MTD will require individuals who have qualifying income exceeding £50,000 to provide HMRC with quarterly income figures via compatible software and maintain digital records. This means that if you're one of the many who pull their numbers together at the last minute in an Excel spreadsheet, then you'll need to start thinking about transferring your data into compatible software such as Coconut. This new process will be rolled out from the 6th of April 2026, although HMRC have been running a voluntary pilot scheme which allowed a small number of participants to test the new process before it was officially rolled out. Qualifying income is the gross income. That's the total income that you receive before any expenses are deducted, and it's your income from self-employment and property combined. The £50,000 threshold is set to be reduced to £30,000 as of April 2027, and then £20,000 in April 2028. Quarterly updates will be required for standard quarters, irrespective of a business's accounting period. The standard quarters are the 6th of April to the 5th of July, the 6th of July to the 5th of October, the 6th of October to the 5th of January, and the 6th of January to the 5th of April. Businesses will be able to elect to report for calendar quarters, so those would be the 1st of April to the 30th of June, 1st of July to the 30th of September, 1st of October to the 31st of December, and the 1st of January to the 31st of March. The deadlines for the quarterly updates will be the 7th of August, November, February and May, following the end of the relevant quarter. So those that elect for calendar quarters get an extra 5 days. Updates may be submitted more frequently and can be submitted up to 10 days early where the information for the quarter is known to be complete. The information to be included in a quarterly update is set out in the MTD income tax notices and will require totals of the amounts of income and expenses for set categories. These categories are broadly the same as those that are currently used for the full self-employment and property sections of the self-assessment tax return. Under the current self-assessment system, businesses with annual turnover below the VAT threshold are eligible to use 3 line accounts, meaning only income, expenses, and profit or loss need to be reported. The MTD income tax notices allow these small businesses to continue to record transactions and report only these 3 lines of data. Separate quarterly updates will be required for each business. For example, an individual operating as a sole trader who also has a UK property business would need to submit 8 quarterly updates a year. Income from UK property and income from overseas property are each treated as a single business. If a taxpayer has more than one self-employed trade, a separate update is required for each trade. The quarterly updates are a simple summary of transactions, so there is no requirement to make tax and accounting adjustments as if they're full tax returns. And there's no expectation that such adjustments would be made. Quarterly updates do not include a declaration from the taxpayer, and inaccuracy penalties will not apply. From April 2025, the quarterly updates are cumulative year-to-date figures, and in most cases, corrections will be made automatically when the next update is submitted. After the fourth quarterly update is submitted and is final, the year-end tax return can be completed. The year-end tax return process includes 2 steps. Step 1 is the BSAS, Business Source Adjustable Summary. This involves the software retrieving the totals from the final quarterly update submission from HMRC systems. It's then at this stage that the tax and accounting adjustments needed to adjust the quarterly update figures to the final figures for the tax year are made and submitted to HMRC. This step is done for each MTD income source. It's likely to be at this stage that adjustments to account for non-tax year accounting periods will be made, but that has yet to be clarified. The second step involves bringing together the information submitted through MTD income tax with information about the taxpayer's other sources of income and details of other claims that form the complete tax return. This step will include a declaration like that on the current self-assessment return. You can choose to follow the MTD rules voluntarily if you want to, even if you're not legally required to do so. HMRC will initially review all self-assessment tax returns filed for the 24-25 tax year to identify those who need to follow the MTD rules from April 2026. So assuming you file your 24-25 tax return before the deadline of the 31st of January 2026, if it shows that you have gross income from self-employment and or rental income of more than £50,000, you should receive a letter from HMRC in February 2026 to notify you that you need to comply with MTD from the 6th of April 26. You will be able to apply for an exemption from MTD if you meet certain criteria, although this won't apply to many taxpayers. If you start a new self-employment or you start to receive rental income on or after the 6th of April 2025, you will be in the scope of MTD once your annual gross income exceeds the relevant MTD threshold. You will be required to follow the MTD rules from the 6th of April after the 31st of January filing deadline for the self-assessment tax return, which shows the relevant gross income figure. Alternatively, you'll need to apply for an exemption for MTD. One anomaly that is worth noting when switching from an annual self-assessment tax return to MTD is that in the year that you switch, you will essentially be reporting under both systems. Someone switching to MTD from April 2026, for example, will need to file quarterly returns from that point forward. However, they will also need to ensure that their 25-26 annual self-assessment tax return is filed by the 31st of January 2027 under the old system. Coconut is built specifically to help with making tax digital for income tax, so switching from traditional self-assessment becomes quick, painless and worry-free. All users can access Coconut via the mobile app or the desktop version, meaning you can update on the go or from your laptop when you need a deeper dive into your numbers. Coconut is HMRC recognised and fully compliant with MTD, so you'll be able to make all submissions via our software. The software is simple to use with clear steps to follow along the way, so anyone can use it to manage their business finances and stay fully compliant with HMRC. It's been designed so that tax returns can be done quickly and accurately and don't take up too much of your time. And it's suitable for sole traders, those working under CIS and landlords. Now, I'm just going to show you here how to make an MTD submission with Coconut. So head to MTD ITSA. You're going to click on Enter National Insurance Number. You'll need to provide one so that Coconut can tell HMRC which taxpayer these numbers relate to. You're going to click on Connect to HMRC. This will give Coconut permission to communicate back and forth with HMRC's platform. Click Continue. And then you're going to need your government gateway ID. So sign in with that one. You'll need your password as well. And then click sign in. give permission. And then this is the screen that you'll make your MTD submissions for. So first of all, I want to go and check my numbers. So I'll head to report and then profit and loss report, head to the current tax year. And then this is a summary of my income and expenditure. I can date range this one. So I'm going to enter a custom date range, and I'm going to date range it for the first MTD quarter, which will be the 6th of April 26 through to the 5th of July 2026. And then view. And you can see it's whittled it down to £300 odd of income and then a handful of expenses. So those are the numbers I'm expecting to submit. I'll go back to the MTD module. And if I click on Q1, we've got a shortcut here. So the date range is already entered. And then we've got the same income and same expenditure numbers that I was expecting. So I'm happy. I'm going to click submit at the bottom. I can double check what's being submitted here, income and expenditure. Click at the bottom, and then that's it. The information's gone across to HMRC. So you can see that although MTD for income tax sounds complicated, with Coconut it's made very straightforward. That was everything you need to know about making tax digital for income tax with Coconut. I hope you found that useful. Thanks for watching. See you next time.